Hi everybody and welcome to Forex.com's top 3 FX picks for this week for forexspace.com with myself, Kathleen Brooks, Research Director here at Forex.com. So it's been a huge week for the FX markets. We've seen huge changes coming from that non-farm payrolls report. Also, big surprises from the ECB and the Bank of England meetings. Forward guidance really was the quote of the week, and that meant bad news for the euro and the pound. Now, interestingly enough, bad news for euro and the pound against the US dollar. But we saw euro sterling actually rise to one of its highest levels in a few weeks. Euro sterling closed the week above 86, a very bullish development that had been the top of the medium-term range. However, we're not completely sold on this euro sterling strength, and we think it is a sell on any strength. Now, this chart shows you euro sterling, which is pointing north, and then you also get the yield differential between Germany and the UK, and that is firmly heading south. Now, what happens usually is that you actually see the two moving together. So we've seen a divergence between euro sterling and its rate differential, and to us that suggests that this rally in euro sterling really is a little bit unsustainable. Now, we don't necessarily think euro sterling is going to collapse or go back to the bottom of that range at 84 anytime soon, but we do think that it could trade in a bit of a range between 85.50 and 86.50, with 86.5 really attracting some selling interest. Added to that, at 87, there is a huge level of resistance, the top of the weekly cloud. Now, our second chart, or our second trade idea for this week, is going to be cable. Let's take a quick look at that chart. Cable got a real pounding, sorry for the pun, last week. It fell 2.5% against the US dollar. So we are looking for the pound. We do still expect it to continue to decline, but we think potentially there may be a bit of a chance for it to recover just a little bit. And we probably wouldn't look to re-enter any kind of short position until we got kind of maybe to that 150.10 mark. Then we would look for a further decline, retesting that 148 level. Now, last week we didn't quite get to the lows of the year so far. That happened at the end of March, or the middle of March, sorry, when we reached 148.30, but we did get down to 148.50. And in fairness, kind of attempts to get above 149 today haven't really been fantastic. But this week, we really think that if the dollar continues just to give back a few of those gains, then cable could be one of the chief beneficiaries of that, largely because it moved so much to the downside and is looking very, very oversold at the moment. So any type of rally above 149.50 towards 150.10, we think will be sold into. Now, the final tip for this, or FX idea for this week, is going to be gold. Now, I know that's not strictly FX, but it is moving very much with the FX world. Obviously, it moves very closely with what's going on with the dollar in particular, because we are looking at gold priced in dollars. It has had a real troublesome few months, gold. It is at a 2010 low. There are no real reasons at the moment. The fundamental reasons to buy gold have really been eradicated. We see deflation expectations remaining quite high in the US. Likewise, we see inflation expectations, consumer inflation expectations, as measured by the University of Michigan Consumer Confidence Survey. They are also on the downside. So we're not seeing too many reasons to buy gold. Obviously, gold being an inflation hedge as well. Now, we also get PPI data, so producer price data out of the US later this week. That comes on Friday. That's expected to moderate as well. So we think that gold will be sold off later this week on the back of those very, very subdued inflation pressures. Again, just looking at gold not being an inflation hedge, and that for us could really see further downside. Now, $1,200 acting as very, very good support, but over the next few days, if we continue that recovery, 1280, then 1320. They would be the levels that we'd look to go short on the back of kind of weak producer price inflation data. Also, a bit of hawkishness coming from the Federal Reserve supporting their tapering program, really weighing on the gold price and actually getting us down to that 1150 mark in the next couple of weeks. So do good luck trading this week. I hope those tips are useful, and please do join us next week for more. Thank you.